It is easy to find investors with opinions about operations. It is rare to find one who has personally built and scaled companies across multiple decades and models. Florian Heinemann has done both, and at the same time. He co-founded Just Books in 1999, sold it to Amazon, ran online marketing at Jamba, and as managing director at Rocket Internet was instrumental in scaling Zalando, and he also built the marketing and data infrastructure across dozens of Rocket companies. Since 2012, he has been building Project A Ventures in Berlin, an operational VC with over 120 in-house experts deployed into portfolio companies from day one. More than 130 investments and several unicorns invested in. And now he also co-invests alongside PE funds in traditional businesses. The premise is simple. The difference between a company that scales and one that stalls is rarely the idea, it is the execution, especially around organization and people. And today's episode is about organizational building and hiring, the two decisions that are laying the foundation for everything else. ETA operators face versions of every problem has spent 3 decades solving. Flo, welcome to Lineage.
Before we go into the frameworks, I want to travel back in time. You started and operated Just Books in 1999, 5 WHU students, you went quickly to 15 employees. In a business that's small, every hire is a make or break. What did you learn about building a team under those constraints that you still apply today?
If you compromise on your early hires, that will kind of very strongly influence the quality you have in that functional area or in that area of expertise going forward. It's like along the lines of this A players hire A players, B players hire B. So I think that's why it's so critical that the first hire in a specific area is kind of the best quality you can get at that stage. And that applies to kind of the skill set and kind of the functional expertise, but it also applies to the culture fit. So if you don't hire a person that fits in your culture in a small organization, and it simply causes so much friction that it really leads to dysfunctional outcomes. So this also is quite interesting. That's also why I would argue in an early phase of an organization, I would be very cautious to be too diverse in your hiring, which is a little contrary to, overall belief, because everyone thinks, diverse teams are more productive, etc. And I would agree that's definitely the case. I think once you're a little larger, once you're established, once you know what you really want to do, my learning is, so try to get the best possible first hire. That is informed by kind of my strong belief in what I call path dependency. I'm a very big believer of the path dependency concept. So what does path dependency mean in very simple words? The structure or the setup quality or nature of the construct you initially have will very strongly influence the path forward. So if you screw up early, you're in a mess going forward. So, I'm a very big believer in path dependency. Excellence will lead to an excellent path forward. And coming back to the second learning, diversity is probably not something that's digestible too early in a very small organization when you still try to find yourself. Yeah, because I think for diversity to work, you need to have also a skill set to productively deal with this diversity. So what does it mean? In order to benefit from diversity, people need to learn how to communicate with each other, despite kind of the diverse kind of way of communicating, etc. So being a little more homogeneous in the beginning can actually be more productive to get these first 2-3 steps right. And then you worry about how to make your organization more resilient and more diverse by including different views, etc. But I think that's also something that I would probably encourage. So try to be as excellent as you can, try to overstaff in a way in terms of quality, and be very cautious that people fit in.
If we go back to the moment of making that first hire, you mentioned you're working under constraints and in a small business, right? You might operate in the middle of nowhere. What have you seen are arguments that allow you to hire a talent into circumstances that might not be at the time A plus?
First of all, you have to be realistic. Very likely, you will have to compromise on the experience level of that person. So we rather try to hire people, and I see that over and over and over again, that very likely have the potential to be really strong, but haven't shown, this in like 5 different companies before where they exactly nailed this kind of point. So getting in people that have relevant experience into this kind of setup really requires kind of this entrepreneurial mindset and also this risk-taking type mindset, but also ability in a talent. And sometimes even people that think entrepreneurial, but if you, for example, have a family already, you have an apartment that you need to pay off, you simply cannot say, I'm working for EK instead of EK or 200K. Now I'm taking equity instead. Yeah. So people, even if they would like to do it, they cannot do it because they simply have constraints around their life. So that's why very often if you hire under constraints, you have to go more for talent or for potential rather than experience. So that's kind of the first, I think, compromise you need to do. And I think you have to be happy with taking these kind of decisions. And the other is that I think it's a very simple self-selection mechanism that you can choose. Are the people that you want to hire, are they willing to exchange kind of, a fixed salary for some kind of entrepreneurial upside if the company works well? And I would do that, and I would bring that up in the conversation really early. Yeah, because if people are not willing to do that, they're very likely not going to be the right person to hire. Yeah, because if people don't value the upside potential, and that's not something that's good or bad. That's again more a fitting or non-fitting type personality structure. If people by personality structure or you kind of their kind of personality are not able to value opportunity fairly high, then they will never be happy in a setting like this. So it also doesn't make sense to convince them with some kind of story. And I think that's why it's so important to give them this kind of very hard facts type trade-off early in a conversation, because sometimes you can lure people into some kind of visionary idea, but that will not carry that long.
At what level, what kind of functions would you incentivize people with more of a vision rather than cold hard facts on the monetary side based on your experience?
At least kind of your C-level has to at least partially function in this kind of way. I think you cannot expect it from every employee. And we saw that in Germany as well. People didn't value equity very high or ESOP, like stock incentive kind of programs, very high until they get to know people or experience it themselves that they benefited from. I think from the C-level people or the people that you expect to drive the company with you, I think that should be people that have this kind of culture or kind of attitude in them. And I think the moment the upside tends to become more visible or tends to manifest itself, then I think you can try to spread the culture wider and wider. I mean, I always encourage people to do that because from my perception, that is something that will creep in and give people some sense of identity. And it often doesn't cost a lot, yeah, especially not on the cash side. Yeah. So I would be more generous than being too tight. I think that definitely has positive impact.
Every search fund acquisition or every business we acquire, there's always an employee incentive package, option program of, let's say, 5 to 10%. Can you give, first-time entrepreneurs who would step into a role, what are basically, how much options would you give a new CFO? We have a running business that's profitable. He should get a fairly decent salary. But as you said, the C-level should also carry the vision of the new CEO in that business. What are thresholds where you feel this is a fair option package for a C-level in such a scenario?
So here we have a running business that has shown that it has a right to exist. But typically, I wouldn't make it too scientific or too complicated. I mean, if you have some kind of option pool between 5 to 10% or 5 to 7%, that's probably right. Yeah, and in a C-level type, you would probably be in the range of like 1 to 1.5%. What's also obviously, or you can also maybe give 2, but I think what's also a critical thing here, what people often forget is, how is the incentive scheme structured? Is it kind of a virtual option pool where you can also go down to a strike price of virtually 0 or €1 per share? So people benefit already from the equity value that has been generated before, or do you just give them kind of a share in the value increase that's happening from the moment they entered? Yeah. And my thinking here is, or my experience is also, I would, rather give a little less, but have people in terms of percentage, but have people start very low. Yeah. So like from a fairly low entry valuation, that's probably more critical in a startup type context, because in startups, as we both know, yeah, people can also, you can give out incentives at valuation X, and then 3 years later you find yourself at valuation X minus 20% or 30%, and then you actually have a problem. Yeah, and you see it also in that's why stock exchange listed companies often give out so-called RSUs, restricted stock units. Yeah, where you basically give people shares and they benefit from the full value. They also have to pay full taxes on it. Yeah, but they at least have a value regardless of how the valuation benefits. So I would rather go low, because then you are not running into the problem in terms of, the entry valuation or the so-called strike price that's applied, because that will give you flexibility if you have a problem with your company or valuations go down. I would say in general, C-level, probably 1 to 1.5%. Always should apply some kind of vesting, to it. 4 to 5 years. So people have to stay for 4 or 5 years to really have the full kind of equity grant fully. We often work with so-called cliffs, so they have to stay at least a year, which is kind of a kind of probation period.
Yeah.
For ESOP, so they at least have to stay a year until they really get something. And then there's different philosophies to it. I mean, there's people in the US often, but also you see that in Europe, people have to stay in the company to maintain their ESOP. Otherwise, they will have to exercise their options. So that leads to the fact that often people, when they leave the company, they either, exercise options, or they lose their option package altogether. I mean, and I think that's actually not very fair. I think, either you have a vesting of longer periods. If people stay for 5 years and leave after 5 years, then they should also be entitled to keep it. So that's kind of my philosophy here. But obviously there's different philosophies. But I think, and then if you go one level below, you are talking about, then, half of that, or sometimes a third of that. And if you have junior people joining after a year, why not give them 0.1%? Yeah, it's not a lot of money. In the end, it might only be a few €1,000, but still, I think it makes a difference. And I would be generous in terms of, who gets something. Yeah.
I mean, it's definitely not something that in the Mittelstand space has taken a massive hold. At the same time, as you said, Mitarbeitervergütung, Aktienpakete, they do exist. And I think it's also a case of, and I think that's why we're also talking about it, making it relevant again, and also allowing, especially in these small businesses, new entrepreneurs, new CEOs to experiment with it, because you might find the next generation of the Gen Zs of maybe they appeal to that much more so, which leads me into kind of the next question, right? Potential versus experience. We touched upon it briefly, but I just wanted to get a better sense for what does potential actually look like when you are evaluating someone, and what are the key characteristics that you're looking for when talking about potential?
Yeah, I think one key learning in that concept is, or regarding that concept is, potential is very context specific. So what do I mean by that? I don't, because there's people that basically are A players, hire A players, but I would argue that being an A player is often not universal, but is tied. I mean, there's geniuses. Yeah, there are probably A players across various kind of, applications of their skill set. But most people I know, including myself, I think we are good at, in certain situations, in certain functions, in certain fields, but we're not good at something else. So I think what's really important, and that's often a mixture of intelligence, functional skill set, but also a question of personality. Yeah. So I think there's certain functions or certain applications of knowledge that lend themselves to specific character traits. And I think it's always a combination of, does the person have the potential in terms of skill set and intelligence and mindset, but also in terms of character traits to be very good at something, whether that's product or sales or marketing or data or whatever that is. And I think if you are able to recognize the potential in some talent to be very good at something, that's very helpful also, because if these people are really gifted in a certain way, and I really strongly believe in talent, not only in terms of sport, but also in terms of, being good at marketing or being good at coding or whatever. I think the great thing is if you're right with this, you really have the chance to build kind of a unique knowledge base in a specific field for your company. But I think the biggest success, I think, that I've at least experienced is if you're just shaping your own approach, and then you have this great talent on board that's really unconventional in how to approach a certain function. I think that's kind of the killer combination, especially in a time like we have today, where you have so many changes through AI, but also other things, that the experience knowledge of people that have done this for 15 years is sometimes actually harmful or not helpful, at least. I think these people can be so much more productive and they can really make a difference. And that's why I love it so much. Because if you have that match of potential and the task or the field you're trying to tackle, that can really be a differentiating factor for your company. And the great thing is you don't need hundreds of these people. If you have like a thought leader or kind of architect in one function, I mean, the whole rocket success for some time, and rocket success was not very lasting, yeah? But a lot of the rocket success for some time was just generated based on superior marketing. In a way, superior marketing is not enough. You always need, you need product, you need logistics or whatever, you always need 4, 5, 6 functions working excellent in a similar way to really bring a company to kind of sustainable level of excellence. Yeah. But superior approach in sales, a superior approach in data, a superior that can really make a difference, especially because in these, small and medium-sized companies that we're talking about here, the level of professionalism is not that high often. So having 2 or 3 people that really bring fresh perspectives in an excellent kind of way, that can really make a big difference. And that's why I'm such a big believer of this betting on talent, yeah. But obviously, it's like an early stage investment. You never know, it's or betting on an early football player or betting on an early artist. Yeah, there's an inherent risk going along with it. But I think it can really make a big difference for your company.
If you think about, if I put myself in the shoes of a first-time CEO who has never hired a CFO, who has never hired a head of sales, how do you go about understanding what you actually need? Like, you don't know what you don't know. And in that situation, again, where do I start? How do you find out what you actually need to hire for?
I think it's a very good question and a key question. And from my perspective or my opinion or my experience, I would say it's probably for something like a CFO, accounting, financial, controlling, this kind of area, experience really matters, or experience is very helpful. So I would like, if you want to find out, and I think that's often in a fairly unprofessional company that has been organically grown by some entrepreneur, often these kind of processes, cash management, accounting, finance processes, are often homegrown and quite unprofessional. And I think
Yeah.
hiring somebody there that can lift you to a certain level of professionalism. So that's like in keeping it in a football type analogy, you would basically say you care about take care of the defense first. So you don't want to get a goal. And here I think it's perfectly okay to hire somebody with a lot of experience, or as experienced as you can get it. Yeah, because they make sure or increase at least the likelihood that you don't fumble on these kind of issues. And I think that is key, because that allows you to play more on the offense in other areas like product or sales or tech or whatever. Yeah. So and that's why I think, especially if you hire, if you get into a new company first, you take over the responsibility in a new company, having a really clear picture there and having a high level of professionalism in that area, I think, is key. And I wouldn't experiment there. I would take care of the defense first. It's really about making sure that nothing goes wrong and then starting to play offense.
Now, you have never built a marketing team. You've never built a sales team, haven't thought about product. How would you start from day zero to fact find what you actually need? Are there certain processes or frameworks where you feel like, hey, this has helped me in the past to understand the problem at hand, what I actually need to hire for, before going out and just hiring people?
I think you have to have some kind of hypothesis quite early as somebody taking over the company as a CEO. And I think I would not buy a company or would not get into a company without having at least some kind of idea of where the areas will be that potentially will lead to like a better offense than before. I think that has to be part of your thesis or your hypothesis when getting involved. I think if you don't have this idea, if you have no idea of where this company lacks or plays below its potential, it's probably not the company you should buy. If you look at every PE fund that takes over a small cap business or mid cap business or large cap business, they look at the business, and when they sign the term sheet to buy that business, they already have some kind of value creation plan that focuses on 3, 4, 5 areas where they basically say, this is how we increase the value of that business. And I think that often is, some part of it is efficiency and cost. But in most cases, especially today, that's we can internationalize it. We can have a new product line. Sales is not digitalized in any way. They don't do anything with their existing customers, something like that. And there have to be like the 3, 4, 5 key areas where you think you can do better. You also do that in tech. And I think that's a very nice framework. If you have a tech pipeline, you try to prioritize the new features and the tech projects that you do. You try to prioritize them by business value and basically say the things with the highest business value, they get created first. And you have kind of a ratio of business value versus the kind of effort or resources you need to put in. Obviously, those things now become a lot easier with AI. That's at least what a lot of people say. But I think this business value concept is a very practical one. So I would really try to come up with an hypothesis on what's kind of the business value of the different areas that you could address, internationalization, whatever, and then maybe add something like, how quickly do I generate benefits from this? Because what my experience is also, I think you need to show a team early successes to really motivate them. So apart from this is most value creating, but we will see results in 5 years, that's probably something you can do. That's often the problem with data infrastructure. So investing in data infrastructure can be highly value creating, but results of this are often, you'll see it down the line. I would always have things that show a path to success and make it visible to the team. And you might have like a simple matrix structure where you basically say that's the business value, that's how quickly we'll see it. And then you'll prioritize on things with a high business value in short time period. And then based on those are the value levers that I see, then you hire for those value levers. And then I think you come up with a decision within that value lever. Do I want somebody really creative, out of the box potential person? Or do I need somebody with a lot of experience in exactly this? Because experience is worth a lot in that area. And I think that's always a decision. Hiring for talent, from my experience, If it is successful, it's really good because people are cheaper, they're more loyal, and they often come up with better results. Yeah, they really drive the knowledge body of the company in that regard. But if you are in things like logistics or production, being too much Jugendforscht, experimental might also be quite detrimental. I think in a setup, in an already running setup that's profitable, I think the level of caution or the level of care you can take or afford is probably a little longer. Yeah. And so that's why I think it makes sense to not be too high risk on these kind of things, but rather try to get it right, even if it costs you 2 months longer.
On the potential side, how far in the future are you planning for talent to actually show and pop up? What are you kind of the time slots? If you, the CEO, you should always be thinking ahead, right? At least 12, ideally 18, 24 months, see where it's going. How much time do you give talent to develop to see whether your initial hypotheses on a person actually worked? And how quickly would you then change something if necessary?
I think the good thing about fields like marketing, sales, product is you see whether potential materializes. I think you see that very quickly because most things that we do in business are not very complicated, to be honest. And I think if a person has a talent for something, I think it will, like product, for example, it will materialize really quickly. You'll see it within months. And the same on marketing. If somebody has like just this insight level in how marketing works, how sales work, you'll see it easily within a year, whether a person is on the right track or not and shows development. What often helps is if you connect people with potential to other people with potential in different companies. Talent needs sparring or needs guidance. So I think you need to make sure that if you have this young marketing talent or this young product talent, they are able to speak to other people that are also trying to excel. And either that's happening through the investor or you help them to find other companies with similar challenges. And then I think talent will evolve really quickly.
I think that's interesting because actively thinking about how my new head of sales or marketing person, that this person is also getting connected, is something that can definitely be accelerated, and we could, as investors, also put more focus on.
That's why we had a really good experience. That's also, I mean, one thing that we've done quite a lot also here as a venture fund, trying to have our functional team bring together the data teams of portfolio companies. Yeah.
Mm-hmm.
So that's much more valuable than me giving input to some data person, because I mean, yes, I did some data work 15 years ago, but they don't want to know about that. Connecting functional operators, I think, is a really big value creation lever that you don't even have to do yourself. You just have to somehow facilitate it. And I think that's often overlooked because, C-level people try to exchange themselves all the time. Yeah, they go to conferences, whatever. And, the people that actually do the work, they're somehow they're not kept away in the basement. That's like a little too hard. But it's, they also benefit from this. And I think especially young talent does, yeah, because there you'll see if you pick the right person, they show a very steep learning curve. And I saw that over and over and over again when I was still more operational. Regardless of age, regardless of experience, if you pick the right person, how quickly they were a lot smarter than you are in that field, and that is so cool to see. Yeah, but I think that's also something you need to enjoy as a CEO. Yeah, facilitating that people get smarter in certain areas, smarter than you, very quickly, and see that as a good thing. Because a lot of people think, oh, I'm the CEO, I'm the C-level for marketing, so I have to be smarter than my employees working my team. And I think that's exactly the wrong attitude. How great can it be if other people that do the actual work do it for you, and you just you become a coach, yeah, rather than a player. And I think that's also a key thing in C-levels, and the best C-level people I know, that they thoroughly enjoy that without losing authority in a way. Yeah. So I think as a CEO, you really have to encourage that in a way, that this is completely okay if the people that actually do the work speak also in board meetings or investors. So you have people that actually do the work, have them explain what they're doing. And that's not a bad thing, but it's actually a good thing, because it really elevates people, and I think that can be a great lever for value.
I think it's a nice segue into the section of organizational building, right? It's such a valid point to empower people to grow and then don't hold them back. What other principles have you seen in small businesses, or let's say resource constrained businesses, whether in a startup or in a small business environment, that a CEO needs to be aware of and pay a lot of attention to in order for the organization to be most productive?
What I love a lot, not because I want to work there, but I think it's a very good analogy. I don't know who's ever seen a trading floor. A trading floor of a large investment bank is really something quite fascinating. So because you have people that are really under stress and they look at 4 monitors or 5, they get emails, and they take decisions, constantly decisions. And they don't need some supervisor or C-level to tell them whether they did a good job or not. They have instant feedback loops. So they know themselves whether they're screwing up or not. And it's very objective, because either they lose money or they make money, but it's not an environment I want to work in, because I don't find it very fulfilling in a way. But I think the concept of how this work is structured, I think you can learn from quite a lot. Why? Because if you give people clear indicators in almost real time, whether they're on the right track or not, that's a highly productivity enhancing kind of way of working. And if you can, that's not always that easy, but I would, at least one lens I would look at a business is, what can I structure, or how can I structure it that everybody in a small organization but kind of gets feedback loops on their work by themselves without having some kind of oversight from somebody. Yes, you agree on certain directions and you do reviews on a regular basis, what they're doing, and you coach people. But I think the biggest learning curve, that's at least my experience, especially with people that are driven and that are talented, if they get the feedback themselves. And that's what I would try to do if I build the organization, build reporting, that you somehow make sure that people know this is my goal. And if I do this and this, and that's the outcome, that's good. And they know it themselves without having to talk to anybody. It also leads to the people that actually do the best work getting recognized. Yeah, because if you have a culture of meeting performance, because in many companies you have a culture of meeting performance, the people that are the best storytellers, they get most recognition, not the people that are doing the best work. And that's another thing that I really like in small but also larger organizations, trying to make the people win and shine that are actually doing the best work. Yeah. So I would spend considerable amount of time to define for every area of work that you have, what are the things you want to achieve, and how can you make sure that these get reported quickly, automatically, and that you have a culture also in your company. And I think that's the next thing resulting from that. And I think the Amazon culture is quite similar to that. If you want to make an argument, or if you want to have resources for something, you have to make a case for it. That's fact-based and that's data-based. And that needs to be the culture in an organization, that you get away from this. I think it's a good idea, and I think forcing people to think things through. That's why I like this Amazon culture a lot. If you want something, you have a text that you need to present, that you send up front. That's why I want to do this and this. This is my arguments for it. We ran some experiments that lead us to the conclusion that this is actually a good idea. If you establish this kind of culture in a resource-constrained organization, I think it's a really good way to get the bullshit out of the organization, to get like stupid discussions out of an organization, and to get politics out of an organization. A next concept that I like, if you can afford it. I know it's not the most popular thing, but what I really like is the concept of talent density. Yeah. So you basically try to rank people in your organization, in every team, and you try basically to increase the average quality of talent that you have. Yeah. And you force people to rank people that are in their team. And because otherwise, if you ask people, do I have a good team? Everybody, yeah, I have a great team. Yeah, all of them are great. And I think if you force people to stack rank them, yeah, by 1 to 5, and you have to decide, and the last person probably needs to go. Yeah, that's not the nicest environment, but I think people will appreciate it and the good performance. And especially if you have a small organization that needs to get the most out of it, I think that's a very powerful concept. And that's not typical Mittelstand. I fully get it. And people will say, you cannot do that. And no, but it's not the company that you might not want to have. Yeah, that's all fine. But I think if you focus on the best performing organization and how to get better over time, I think the talent density concept, applying it in a consequent way, is, I think, a very powerful concept.
Just double tapping on it, right? An ETA operator inherits people who were hired by someone else with a different vision and version of the business at the time. How would you go about assessing who to keep, who to develop, and over what time frame?
In the end, I think the key thing is attitude. If you have the right attitude, you're very likely going to be able to do it. So I think the key thing for me is really to identify the people that actually enjoy making this company better. And people that don't enjoy this kind of ride, I think you should get rid of. And that's not something that's morally that's morally not okay. I think if I want to make this company more sustainable and more successful, that's, I think, a morally completely okay argument, and that's doesn't have anything to do with being this soulless financial investor driven kind of thing, but it's the only way to keep companies actually sustainable and alive and maintain a basis for employees, yeah, to actually work for. And it's also for the people themselves, at least the people that have some level of motivation. It allows them to grow. I mean, that's basically what I have a strong belief. Companies, economies, societies need to grow, yeah, to give a lot of opportunity to people, and that gives them a lot higher level of fulfillment. And I think people that don't understand that and don't support that, I would say, are poisonous for any type of organization. And I think they are the ones that are morally on the wrong side. So I wouldn't have any problem, moving in that direction.
In terms of moving forward, you mentioned technology. With Project A, you also, with the PE, a co-investment arm, you're also seeing more traditional businesses that all want to digitize, move into the 21st century. That's obviously a theme we're also seeing highly in these small businesses, where often they are still pen and paper. Based on your experiences, are there certain misconceptions around, hey, this sounds super easy to implement, but actually it is not? Or vice versa, what are low-hanging fruits that you have seen that also work in, mid-sized, more traditional businesses that have not been digitized before?
Yeah, I think it comes down to, the talent versus experience kind of question. Yeah, because I think in many organizations, also traditional ones, you have especially young people, but young doesn't always apply to age. It's more, it's on average, yes, but you'll have some 25-year-olds that are 60-year-olds in their heads, and you have some 60-year-olds that are 25-year-olds, and when it comes to their kind of mental, and I think identifying the people that have a certain level of potential along the lines we just discussed, and empower them to lead this effort. That's, I think, that's the key thing, and have in-house people to do that. I think what you can always have consultants, and we also support in these kind of things. I mean, we have a fairly large team that supports in these kind of things, but we always start to work only when we know those are the people that will drive this in-house. And I think what's absolutely key is, if you want to be successful, you need in-house people driving this process in every relevant function. And those are often not the kind of C-level people that are responsible for this area. Those are very often 27-year-old former apprentice that joined the company full-time 1 year ago, And now probably is the best to lead this company that's based close to Nuremberg in this kind of endeavor. And I think the key thing is you have to identify these people, look for potential, and if you don't have them, hire them, and then really get the C-level people to support this kind of effort and to support the kind of person. And I think that's really the key thing. No consultant on this planet can make sure that this actually works, or no advisor. You have to somehow manage it from within. Even a manufacturing business or even a, wastewater management business needs to be conscious of these kind of developments. And it's what's also quite interesting. And talking about this whole AI stuff right now, if you don't have any kind of credible digitalization approach implemented in your company and lived in your company, thinking about using AI in a proper way without a proper data infrastructure that collects all the data and keeps it up to date and sync and makes it available, you don't even have to think about. But being in the core business application, you need to have done these kind of basic steps and basic organizational kind of things first. And I think if you don't have the proper setup to drive it, it's quite problematic.
You can't take step 2 before step 1. And I think that whole topic is so relevant. It will be so relevant. And we will touch upon it also in another episode for sure, because I know that a lot of ETA succession entrepreneurs are excited about it. And it's also that what we are building at Lineage. With a closing question, Florian, for today, it's a general one, as you can expect. But if you had to give one piece of advice to an operator who had just acquired a business with 50 people, and needs to build a team, needs to take over the organization, one single thing to get right, what would it be?
If I may, 2 things.
Of course.
The first thing is probably to really be sure, or to really think hard about what are the biggest value driving kind of projects, or what's kind of the area where you think you can really differentiate from competition. So and often it's a combination of different things. But I think having this, what I see over and over and over again with successful businesses, they have some kind of playbook, what they're doing better than the competition. And it's often very simple things. So don't think too complicated. I think that's probably also one key advice. Often successful businesses are better than others because they do 2, 3 quite simple things, or have a quite simple principle, what they're doing better or different than competition. And I think identifying this early and basically say, this is kind of the DNA of our operational footprint. I think that's like one thing. And the other is what I really like is this bar raising concept. Really instill this kind of culture of bar raising in your organization. So bar raisers are people that increase the average kind of quality of a certain team because, they are very skilled or whatever. So then I think instilling this culture of, we try to have bar raisers coming into our organization. Does the person that we hire there, does that person make us better? And I think that's also, think about what I said earlier. Potential is context specific, and bar raising is context specific. So that doesn't mean that they all have to be, high flying kind of business school graduates. Bar raising comes in various sorts of functions. Always asking the question: how does the person that we hire here, how does that person make us better? I think that's probably that's the key to getting a business to grow and be on a better path. Yeah, coming back to path dependency again, and I think that really needs to be the goal, that you have kind of a setup where you say the development path that I've just laid out for that business has become structurally better, or is becoming structurally better of what we just did here. And I think the combination of the two, knowing what the operational playbook will be and combining that with trying to get better quality of people constantly, then I think you're well set up to hopefully be more valuable in a few years with your business than you've been initially.
Florian, thank you so much for coming to the podcast, sharing your wisdom, and I hope to see you again For now, thanks so much, and we'll be in touch soon.
Absolutely. Bye.